Good morning, ladies and gentlemen. So today there will be no camera on our stream. Currently using that camera for another project that was started yesterday, so don't have it hooked up to our computer here today for the stream, but that's okay. Anyways, we got a lot of stocks that reported earnings reports today, and that's always fun because it brings in additional volatility and volume into many different stocks on the day. So just to do something really fast, we're just going to run through many of the stocks that reported earnings today. For one, we have Chipotle, which is like an $800 stock, so that's expensive, but they reported. If you have a decent amount of capital, that can be a fun stock to trade. Even if you don't, or even if you have, even if you have a $2,000 account, you can buy 2 shares of this, and this thing can easily move 20 points on a day. So 2 shares, 20 points, $40 trade, right? It's possible. So, just because you don't have a lot of money doesn't mean you can't make money trading big stocks. It's just not going to be a dramatic amount of money. Okay, it's not going to be life-changing. But if you're patient and so on and so forth, you can still make money with a low amount of capital on big stocks like that. All right. So then we also have Snapchat, right? Snapchat reported earnings. Here's another one. So you have Snapchat that reported earnings. You have IRBT, which is iRobot. They reported earnings. You have AT&T, which is T. They reported earnings. You have Caterpillar, CAT. They reported earnings. You have TER. They reported earnings. I feel like I'm missing some. What am I missing? There's many. Okay, there's a lot. There's many, but still, you get the point. There's a couple other ones, but what I showed you are pretty much the main ones for the day. Yeah, or like that. Yeah, exactly. TP exactly, right? You could do an option play. There's many options out there. You're right. Yeah, Boeing reported earnings today. So as you can see, a lot of companies, a lot of bigger name companies, reputable, recognizable companies reporting earnings. People know these companies. They become familiar with them. They're more likely to trade them, right? So to start it off, Snapchat might be, one of the ones I focus on. It probably will be one of the main ones I focus on. The one thing that I don't like about trading Snapchat when it's this low priced is it doesn't give you a whole lot of movement. With the price of the stock being about $16.40 right now. I mean, all the way down here is $14.96. So it's only $1.38 that the stock could potentially move on the day, which it won't. It won't crash all the way down to 14 or 15 bucks most likely. So, you're probably looking at a move where Snapchat would let's say if it just got smoked, right? Let's say if on the earnings day today it gets smoked to the downside, it'll probably come down, at most, or something, down to like 15.60, right? So there's room to make money. It's just not a really big room to make money. So ideally with something like this, if you're gonna want to make a decent amount of money when trading, you're going to have to size up a lot of shares to make the money on. So when you just look at the stock, you have to be able to tell yourself, how much room is there for profit and how much isn't. And so this one doesn't give you a whole lot of area for profit. Something like IRBT though, and I'll come back to Snapchat. But something like IRBT, right? This thing dropped from 90 down to 70. Right? That's $20 a share. There's a lot of money to be made there. All right. The bigger this move, a lot of times the bigger the volatility can be, therefore more money to be made. So going back to Snapchat, last 2 earnings reports, this would be the third one. Snap. I did it again. Snap. There we go. Snapchat. So the last couple earnings report, if you go back, daily chart, and look at them, we reported here, right? We gapped up. Same thing, gapped up from 6 to like 8, and then it had a red day. The next earnings gap up right here, gaps up and gets sold into, so that had a red day. And then now here we are again, where a stock has gapped up on earnings, and I'm anticipating that we're probably going to see a little bit of a sell-off when the market opens, which would result in it again having a little bit of a red day. Okay. So again, probably going to be watching Snapchat short bias initially out of the gate, see if there's some type of profit taking or an early morning kind of wash where, it just sells off out of the gates until it at least gets down to probably $16.10. That's the first level of support that the stock would have on an intraday time frame. So from where we're at is only 16.30, 16.40 down to 16.11 with spread. At most you're making 20 cents, on a trade there. So nothing too dramatic unless it broke 16.10 and kind of gave you another big push. So this is initially going to be on watch for a short bias trade at the current moment in time. You can tell if there's a bullish or bearish divergence by looking at the price action on a chart and by looking at the relative strength index. You can also find bullish and bearish divergences using the MACD indicator. It's all about higher lows, lower highs, and price action on the chart. Time horizon, this is a 1 minute chart. Yeah, it's basically RSI and the stock price is going in the opposite direction, or MACD and price action going in the opposite direction is a divergence. Okay, so now that we've kind of discussed Snapchat a little bit, let's go over to IRBT. IRBT reporting earnings. Probably going to follow this one short bias initially. If you look back you'd have to go to a 3-year chart. These couple red dotted lines, actually the price of IRBT went all the way down to 70 this morning, so it broke below some of these kind of dip points. So I think we're going to see a little bit of a continued sell-off initially out of the gates. So we're going to follow IRBT short. It's already rolling to the downside beautifully. So again, as soon as it starts to break below 73.45, you'll probably get a little bit of a panic sell-off from anybody dip buying in after hours trading here on this $73 mark. And if we break that, good chance we shoot down towards 70. If it does shoot down towards 70, that's where I'd look to cover the short position and possibly even flip long for reversal long trade, because that's going to be the after hour low. So there's most likely going to be a bounce there because stocks naturally don't break down like a bounce level or a support level like that on their first attempt. So it's likely we see this break down, head towards 70, bounce back, and then retest 70. If the retest of 70 holds, then we could be looking at a squeeze back high. But again, initially short, followed by a bounce, maybe around 70. If it snaps 70, keeps going, great, but I think we'll see a little bit of a bounce off 70. Cool. All right. Next one is, well, it doesn't really matter, honestly. Caterpillar getting smoked here on earnings. Okay, the more that Caterpillar goes down in pre-market trading, the less I like it for a downside trade. So this is the 4-hour chart. You can see we're obviously getting smoked, or Caterpillar is getting smoked. The price is at 131, right about there. There's really no true support there. It's arguable that there might be a little bit of support at about 130 from this dip bounce. Consolidation, rejection, kind of holding, bounce here. So I'd say 130 would probably be the first initial mark I would watch for as an intraday price action bounce level. If it breaks 130, I mean, honestly, at that point, it's hard to say what it's going to do intraday. At that point, it's like you might as well let it fade out down until about 120. 120 would be a great buying point for Caterpillar if it gets there for a swing trade. What I'll be watching for actually is probably first watch it short, and to the gentleman asking a question about the bullish and bearish divergence, there's already one forming here on Caterpillar. You can see the price action of Caterpillar has been going down, while at the same time the RSI is starting to trend up. So you're getting opposite information there, so to speak. It's like, for example, it's like you're not going to cook a bowl of cereal in the oven, right? Because that makes no fucking sense. Who would do that? Why would you cook a bowl of cereal in the oven? You don't do that. Right? Doesn't make any sense. Just like price action going down, momentum picking up to the upside, that doesn't really make sense for the stock to continue going lower when momentum's starting to pick up to the upside, right? So again, that's the concept, is it's very challenging for a stock to continue lower and or higher when you're getting something that contradicts the move, right? And just like this momentum, and this isn't even the greatest one. This is like an okay divergence. Sometimes they don't always play out because ideally what can happen is, right, like if you're looking at, is this zoom? Yeah, it kind of zooms in a bit. Hold on. So right, like you're starting to see higher lows here on RSI, which really just means that the momentum is kind of shifting a bit, right? So like you can see how this move went lower on the price, right? So did the RSI. The RSI came down, but it's above this previous RSI low, whereas the stock chart is below this previous. So you can see RSI was this low when we were here. We bounced, we rolled over. Price action's now below this low, but the RSI is above this low. So you're getting contradicting price action movement to momentum in the stock. So a lot of times what's going to happen is you're going to get one of those, right? And then it's also, what else is this starting to look like? This is also starting to look like, sort of, not really, I guess that's kind of early, but you're kind of getting this downward channel, right? So as soon as this trend line breaks, you can get a squeeze and a push, right? So people are going to say, we'll just trade the trend line break. Well, the trend line break was also accompanied with the bullish divergence. So you're kind of seeing that trend line break. You're starting to see a little bit of a push, right? That makes sense. It's starting to change directions. There's a bit of a bullish divergence there. So, and it goes both ways, right? If we flip this chart upside down, it would be the exact same. It would be the exact opposite, right? You have the stock charts going up, right? Price action moving up while momentum is trending down. People might find that easier to follow. Like when you're buying a stock and it's going up, it's going up, it's going up. You're like, oh shit, and then all of a sudden it just kind of like comes down out of nowhere. Yeah, the whole time it was going up, it could have been losing momentum, right? So think about driving a car, like 100 miles an hour and jumping out of it, tucking and rolling, right, while it's going up a hill. Eventually, it's going to lose steam and it's going to start falling back down, right? If you put a car at 100 miles an hour up a really big hill in San Francisco, a really long one, let's just say, eventually the car's going to go up the hill until eventually that momentum dies out, and then it's going to start coming back down the hill. And it's the same way with stocks, right? It's going to have momentum going up until it starts to die out, and then it just kind of rolls over, decides to cut its own head off, and then boom, drops. Okay? What's the better stock to trade options today? Honestly, any stock that's going to have volatility is going to be good for trading options. So, again, you could watch. Netflix is starting to do a bearish to bullish divergence. But again, right, that's the reason we make these watch lists. We point out a bunch of stocks that are probably going to have decent moves. And then throughout the day, whatever one looks best to you that you think you can find success trading, that's the one you jump on. So Caterpillar, anyways, we'll be following this one today. Again, the more it goes down pre-market, the less I like it for a short, because as you're starting to do this, right, you've already dropped. This was a good short. Then we kind of rolled over, continued, right? And now RSI's changed directions. Like, this isn't really a good short. This is something that I'd just be more hesitant to even shorting now. Probably kind of on the fence trading this. What else do we have? We had AT&T report earnings, but they didn't really do much from what I remember earlier. Yeah, they're kind of going back and forth, kind of awkward. So this is one where it's already created multiple levels pre-market, so the likelihood that you get fluent movement in one direction right away just isn't going to happen, most likely, because you have 3 spots pre-market. You have this, well, actually more like 4. You kind of have like this consolidation zone, you have this low, you have this high. So you have a pre-market high resistance, you have a pre-market low support, and then you have this intraday pre-market channel consolidational move that has a breakout level here and a breakdown level there. So the idea here is you're likely going to see a day where Intel kind of, either pushes down, kind of bounces up, and it has a really awkward start. Imagine AMD yesterday in the beginning of the day, like this. Like, this is the tip. This is a movement that you could expect to see on Intel today. Something similar, might not be exact, but something similar, because you're putting in a bunch of these important price action levels pre-market. So fast forward to the intraday or market open, fast forward, And now you have the stock can pop up, kind of hold here below it, then it breaks over here, squeezes up, then it hits this resistance, comes down, so when you create multiple levels, it creates choppier charts, right? Just like, what's another good stock that was just doing it? Like Roku, right? Let's look at Roku over the course of, like, I don't know, it's probably 10 days. So let's do 15 days, 5 minutes. 15 days, 1 minute would even work. But yeah, we'll do 15 days, 1 minute. Ready? So we're going to go back to before Roku had its big squeeze. Ready? So you're kind of seeing these days. All right, so Roku pushes up. Right, so it kind of drops down, bounces up, drops down, has another move up, then another move down, right? And then it kind of shoots up, comes down, bounces up, then does all that kind of whack trading in the beginning. All right, then you have this down, up, kind of awkward, right? Then you have this day where it's down, bounce up, down, right? Then you have the next one where it's, okay, so that's what happens when stocks start to create multiple different levels is they become really bouncy, rejecty. So whenever I get an earnings report like AT&T that kind of looks funky pre-market, I usually tend to stay away from it because it'll give you more of a kind of a whipsaw, kind of random trading day than it will a fluent trading day, okay? Is trading 2-1-2 a good platform? Would not know. Shane, yeah, probably in the future to answer your question about more like an analysis in depth about reports. Yogi, you might be better off just, doing some type of long-term investing, opening up a Roth IRA, or even an IRA. And just doing some long-term investing for the current time. The best advice I can always give someone is buy low, sell high, or sell high, buy low. And I know it sounds so generic, but it's literally the most easy to understand concept there is. If you buy low, right, you're buying on sale, and the likelihood that it goes up is pretty good, right? When you're trying to sit in between price action is when it gets tricky. When you're trying to just trade these random breakouts, then it becomes hard. But again, like I said the other day, look at ILMN for a swing trade, right? Buy low and see what it's been doing the past couple days. I still didn't buy it. I haven't bought it yet. I might be buying today. I'm kind of waiting a second. But like this is a good example, right? Look at what happened to the stock. Got smoked into support. Buy low. There's going to be a bounce. This thing will bounce, right? This will most likely bounce, okay? The reason I'm not buying it here is because I would rather have it down here. I wanted it down at 270. Will it get to 270? Maybe, maybe not. What happens if it doesn't get to 270? Does that mean I missed the trade? Probably. Okay, I missed the trade. There'll be another one, okay? And what that does, for me missing the trade, it protects me. It makes me even better at trading because by missing the trade, I am disciplining myself to only trade something that I know in my mind is probably going to be the better win, right? If this were to come all the way down to 270, I would have less of a problem buying it than I do here because here, we're arguably bouncing off of this support, but arguably trying to bounce off this support and not successfully, and we might just smack down to this support. This is a stronger support zone than this is. So this is like a trade where it's like, well, you could take a stab at it, but don't, put everything you have on it. Like that's a trade where it's like you're kind of iffy, so maybe go quarter size. You get yourself involved. If it goes, it works, right? But for me, it's like I would like it down to 270 because that's a no-brainer. I mean, if that thing gets smoked into 270, there's probably going to be a bounce right off at 270, so I'd buy it there, okay? Now, I hope this doesn't come off the wrong way, but more often times than not, when somebody asks me, what do I think of a stock? It is normally because they're already trading it and investing in it, and usually having trouble at trading it, right? So it's not what do I think about the stock, it's what do you guys think about the stock, right? If you're in the trade right now on a stock, you got to ask yourself why it was you were buying the stock, and is it meeting or following the criteria that you've built for trading that stock, right? Because whether or not because my mindset is far different than many others, right? Sizing is different. I'm a day trader, occasionally do swing trading, and I also do long-term investing, right? So like, what do I think about home? Well, it's a broad question, right? So what the hell? This thing's been getting smoked. So what do I think about home? It's a downtrending stock. I probably wouldn't buy that. I would say that's probably going to continue to downtrend for a little bit. It does have a really big gap here to fill, but this gap probably isn't going to get filled anytime soon based on the way that this is moving. This is all selling volume, all going down, right? So I wouldn't personally be wanting to invest in that. Possibly would like to short it, right? Like I wouldn't mind shorting this. But again, this doesn't move enough value for me to want to day trade it. If you look at these days, right? This day was 632 to like 6, so that was 32 cents. This one was 619 to 567, so that was like, and again, about 40 cents, right? I can make 40 cents profit per share, or well, I can make 40 cents profit just off the spread of Netflix alone on any given day. By buying the bid and selling the ask, I could make 40 cents, and the stock doesn't even have to move. If the stock moves, I'll be making $1 to $2 profit, right, in one single move. I would have to wait the whole day on home to even make a quarter of that. This just doesn't meet the criteria for me to want to trade that. Yeah, let me take a look at, excuse me, what was, Johnson Johnson. So like Johnson Johnson's one where I've already been watching it, and I'll probably trade it long bias. Right, this is another situation where it's like this could bounce, but I don't think we're gonna bounce off of this point. I think we're just gonna kind of shimmy below and maybe even through it. Like this is a perfect example where it's like this is kind of at a bounce zone, but I'd rather it be down here. Right, I like it down at 121. To me, that's pretty obvious because right now you're in between the high and you're in between the low. You're right at the 50-yard mark of the football field, right? You're going head to head with the Bears and with the Bulls, right? And as this team, as the red team approaches the green team's end zone, you can be sure that the defense of the green team is going to start getting more angered and they're going to start trying to play harder and put up more defense to keep you from entering their end zone. So here would be a stronger buy point as a bull than you would be here. You would need the red team to fumble or throw an interception to reverse the direction of this downfalling knife, which is usually far harder to do than just to stop them on 3 downs. Okay, you get the point there? To stop this knife from falling at the 50-yard mark on the football field is much harder, right? So to speak, the defense is going to put up more defense as they get closer to the end zone, trying to keep them off, right? So with Johnson Johnson, I would be a buyer down in like the 122 level. That's where I would probably want to buy that. Now, that doesn't mean you can't trade it, right, intraday or anything, because there's plays obviously to be made, right? Like, just because I'm a buyer down to this level doesn't mean I'm not going to short this today or tomorrow. It doesn't mean I won't buy it today or tomorrow. I could buy it today, make money, buy it tomorrow, make money, but like a true wanting to buy Johnson & Johnson shares of the company for a possible little bit of a hold or a swing trade, it would have to be at a strong buy point, right? I don't want to buy to swing shares, right in the middle. Like, that's not, no, I'm good on that, So that's the way I would go about it, is this is more of a buy down at the 120 level. All right, guys, it's 9 o'clock. I got to get back to our private group. Really appreciate you guys being in. Again, no video today. Sorry about no video. I was using the camera for something else, and it's not up here in the office. So everybody take care. Have a great day. Hopefully stay green on the day. Other than that, take care, and I'll see you guys in the next one.